Hey everyone, Bob here. Let's start with a bombshell that'll make your jaw drop. In 2020, Jeff Bezos paid a true tax rate of just 0.98% on his massive wealth increase. Elon Musk, he paid 0% in 2018. And Warren Buffett, one of the richest men alive, famously pays a lower tax rate than his secretary. Now, does this mean they're all criminals, sneaking around in dark alleys, secretly laughing at the IRS? Not exactly. The truth is far more complex, and honestly, more fascinating. The ultra-wealthy don't just make money differently, they're playing an entirely different game when it comes to taxes. Today, we're opening that playbook. We're diving deep into how the rich avoid paying taxes. We're going to break it all down in a way that's simple, eye-opening, and maybe even a little shocking. We'll explore two major strategies. 1. The illegal path, tax evasion, which can land you in prison. 2. The legal path, tax avoidance, which keeps billionaires laughing all the way to the bank. So grab your notebook, get comfy, and prepare to see the world of taxes like never before. Let's kick things off with tax evasion, the illegal side of the story. Tax evasion is when someone intentionally avoids paying taxes through deception, fraud, or concealment. This is not a clever strategy. This is a crime. People who do this face massive fines, IRS investigations, and even jail time. Here are 3 shocking examples of how people, small business owners, and even corporations illegally dodge taxes. This one's simple but dangerous. Imagine you own a cash-based business, like a high-end restaurant. A customer pays you $1,000 in cash for a catering job, and instead of recording it, you just don't. You pocket the money, and for tax purposes, that sale never happened. This tactic isn't just used by small businesses. Some larger companies manipulate their books to make it look like they earned far less than they actually did. But if the IRS audits you and catches discrepancies, the penalties can be brutal, and you could even face jail time. Example 2. Hiding assets. Here's where things get more elaborate. The ultra-rich might own dozens of properties, expensive yachts, and offshore bank accounts. Some hide these assets by putting them under fake companies called shell corporations, or even under someone else's name. Picture a billionaire who buys a luxury yacht but registers it under a foreign company based in a tax haven. On paper, they don't own the yacht. This makes it nearly impossible for tax authorities to track. And suddenly, millions in wealth slip under the radar. Example 3. False deductions. Another sneaky move is claiming deductions they don't deserve. For instance, someone buys a luxury car for personal use but claims it's a business expense. Or they exaggerate donations to charities they never actually gave to. On paper, their taxable income drops dramatically. In reality, this is straight-up fraud. Deductions are legal if real, but faking them, that's a fast track to an IRS investigation. Now let's flip the coin and talk about tax avoidance, the legal side. Tax avoidance is about playing smarter, not dirtier. It's when wealthy individuals and corporations structure their money using loopholes, legal codes, and clever planning to minimize their taxes legally. It's not fraud, it's strategy. Let's go over 3 of the most powerful methods the rich use. Example 1. Controlled foreign corporations, CFC. Imagine this. A US-based company owns a patent worth billions. Instead of keeping it in the US, they set up a subsidiary in Ireland where the corporate tax rate is just 12.5%. Suddenly, all the profit generated from that patent is taxed in Ireland instead of the US's 21%. It's perfectly legal, and it's one of the oldest tricks in the corporate playbook. Many companies like Apple and Google have been scrutinized for these exact tactics. Example 2. Transfer pricing. This one is even more clever. Let's say a company is based in a high-tax country, but also has a subsidiary in a tax haven like the Bahamas. The company sells its product to its own Bahamian subsidiary for $1. Then the subsidiary sells it to customers for $10. Where is most of the profit recorded? In the Bahamas, where the tax rate is 0. This legal pricing manipulation allows multinational corporations to funnel billions away from high-tax countries. Example 3. Using dividends. Here's a strategy billionaires love. Paying themselves in dividends or capital gains instead of a salary. Why? Salaries are taxed at rates as high as 37%, but dividends and long-term capital gains, they max out at just 20%. That's why Warren Buffett has said publicly that his secretary pays a higher tax rate than he does, because his income mostly comes from investments, not a paycheck. Let's recap because this is crucial. Tax evasion is illegal, hiding income, falsifying deductions, and dodging taxes through lies and fraud. Tax avoidance is legal, using the system's loopholes to minimize your tax bill. Both lead to paying less, but only one can land you in prison. Here's where people often get confused. Tax avoidance is not the same as tax deferral. With tax deferral, you're just postponing your taxes. For example, when you invest in a retirement account like a 401k, you don't pay taxes now, but you'll pay them later when you withdraw. Tax avoidance, on the other hand, is about permanently reducing your tax burden. The rich don't just delay their taxes. They eliminate them altogether through clever planning. If this opened your eyes, don't just scroll away. Here's your challenge. 1. Smash that like button, because content like this deserves to be seen. 2. Subscribe to the channel. We're breaking down advanced strategies like buy, borrow, die next week. 3. Drop a comment. Which tactic shocked you the most? Was it the yacht hidden under a shell company? Or billionaires paying less than their assistants? Remember, the system is designed to be complicated. Understanding it is your first step toward leveling the playing field. I'm Bob, helping you decode the financial playbook of the rich. Because in today's world, knowledge isn't power. Applied knowledge is profit.